Hello. Yeah. Happy New Year. Happy New Year. Okay, thank you. Yeah. Okay. So this is a topic that I'm supposed to share today, and I just want to curious. How many of you are here actually to find out whether the market will crash this year? Can I see a show of hand? Only a few of you guys. Okay. How many of you don't care? Okay. So yeah. So I may not be able to tell you what the market is going to do this year, okay, to be honest. But let me introduce you to this guy, this gentleman here. Anyone know who is this guy? Don't know? No one knows. He's known as Dr. Doom. Yeah, 𝗪𝘆𝘀𝗲𝘁, very famous economist. And I still remember that, I think 2017, I saw his interview on CNBC. And he was predicting that the market, S&P 500, is going to crash by 40%. And that was the year where he was trying to predict. And in fact, this wasn't the only year that he predicted. If you go back to track all his past prediction, you will see here, I think in 2014, he also tried to predict, and then see gigantic bubble, and then here he also predicted 2013, 2012, 2010, 2009. So almost every year he was trying to predict the market that it's going to crash big time. That's why he's known as Dr. Doom. Right? So, and I think fast forward 5 years later, he got, I think 3 years later, he got it right. The market crashed. And that was, I think, in 2020. Remember COVID-19 that hit the world? Yeah, so eventually his prediction comes true, but that was only 2 years later, but for a different reason. Okay? So, and then subsequently the market went for a bull run, okay, and then in 2022, I still remember that that was the year where a lot of new investors who got into the market thinking that it's easy to make money, they give up here because the market crashed by another 25%. That was the time where it crashed. And yeah, so if you fast forward at the time, okay, let me go back here. Yeah. This was the year, I still remember in 2022, when you talk to any investor who just started, they will tell you that they no longer want to invest in the stock market because they have lost so much money. And a lot of those high-tech stocks that they invested crashed by 80, 90%. And my friends, who I just got to find out last year, got wiped out because he invested in crypto and he leveraged. And he got wiped out, okay? So that was the year was so bearish. And if you were investing in the stock market at the time, I think if you read the news at that point in time, you look at, okay, here, 2022 October, 100% recession. Okay, this is based on Bloomberg economist. And they all say that the market is 100% going to collapse. Okay, that was the time in late here. Okay, just to show you here. Okay, and then IMF also said that the worst is yet to come at that point of time, okay? And you know what? If you fast forward to today, S&P actually went up by 30% since the low in late 2022, okay? So what I have learned in investing throughout the years is that if you keep on predicting that the market is going to crash every year, one day you will get it right, okay? So, and then second thing is, of course, is that the best time to invest is when everyone is so pessimistic about the market. And you read the news out there, every Tom, Dick, and Harry is going to tell you the market is going to crash. Okay, so how many of you think that the market will crash this year? Okay, 1, 2, 3. How many of you don't care again? Okay, so yeah. Okay, we held I think webinar last month, 2 weeks ago. Okay, and we had a lot of questions about recession this year, and we actually received a lot of questions. And I've compiled this for you. And what do you think of the recession? Is it happening this year? Which this is actually last year one, right? And you're referring to this year. US is heading for recession. How bad will it affect Singapore? Oh, this fella even more certain. US is going to fall for recession. And some say that there will be a recession in 2024. Others say it's not. How should you deploy the cash? Blah, blah, blah. And would there be a recession in any of the key markets? Okay, so this is questions that every year investor will be asking. And a lot of you attend this type of event hoping that you can get some insights how the market will perform in 2024 so that you can actually deploy your cash more properly, right? So unfortunately, every year there will be a prediction, but what I would suggest is ignore them, okay? And as an investors, I think how do you tell whether the market is in the recession or not, or whether we're going to crash? There are some indicators that we looked at. Okay, so you can ask ChatGPT now whether the market is going to crash. You see what you'll find the answer. Okay, a lot of times nowadays we use ChatGPT, right? Or some fundamental investors that I know, they look at this indicator called buffer indicator. All right, so basically it's a percentage of market cap around the world against GDP. Okay, so if the number, the chart shows that it's along this line, it means it's overvalued. Now we are in this situation. Now the US market is slightly overvalued. If it reaches the red line, means we are in the bubble. The market is gonna crash. Okay, so at this stage, the market in the US looks expensive, but not overly expensive. Okay, so that's what the indicator tell you. Or some people look at this thing called CAPE ratio. Basically, it's the average P ratio of the market adjusted for inflation, and it's kind of like pointing you to the same direction. The US market is slightly expensive. Okay, that's why you saw a bull run last year, and things are looking more expensive this year. Okay, and some other investors look at this thing called inverted yield curve to tell whether the market is going to crash. Right. So if you look at the inverted yield curve here, I think in 2018 we kind of know that the market seems to be like going to crash big time. Everyone was predicting the market going to crash at the point of time. In 2018, I still remember during the trade war. Okay, I know we all have short-term memory, but when I go back and dig out all this information, you will find a lot of similarities, right? So the market didn't crash, okay? In 2019, it didn't crash, but 2020, it crashed because of the COVID-19, okay? And now we are in the second year of inverted yield curve, okay? And a lot of people are timing that the market is going to crash because this inverted yield curve, okay? So far in the history, it has crashed. Like you will saw what happened here, crash, right? And also here, crash. 0809 crash, okay? So far, and this one also crashed if you count 2020 as a reason, and now we are in the super high inverted yield curve, right? So that's what people are predicting. And of course, some other investors, you can look at the fear of greed index, where it kind of tell you that whether the market is in the greedy zone. If it's in the greedy zone, you don't invest, okay? You only come in when people are very scared, extreme fear. And when you see the crowd in this room become smaller, you know, every time when there's a crash, people don't attend event like this. And when there's a bull market, you see all very crowded. You see behind all standing up. Okay, that's from my experience of over the years of investing and speaking on the stage. And it seems like the market is quite bullish now. Okay, looking at the attendance today. And yeah, of course, there are other ways that you can tell whether the market is on the high side by reading news. I read news every day. All right, so all the, I think, analysts, economists, they all read news every day. Okay, but if as an investor, if you don't know what news to read, okay, and you read too many of them, you may end up as a scapegoat, okay? When people say crash, and then you quickly cash out everything, and you park your money in cash, but then it didn't crash, the market go for a bull run, which is exactly what happened in 2022. Okay? Everyone said that the market is going to crash, but it didn't, okay? So don't rely on news too much, okay? It may harm you, actually, okay, unless you know what you're doing and what you're reading. So I think what you have seen in the past market cycles, a lot of events are, a lot of big crises are actually caused by a black swan event. Black swan events are those events that are not predictable, okay? So you saw what happened in the dot-com crisis. This is actually a man-made, okay, because the tech bubble all went crazy at all-time high, and there was a crash in 1999, okay? There was a dot-com crash, and then subsequently a global financial crash, and of course, pandemic crash. Okay, so all these are caused by the black swan event, where it's an event where caught all of us off guard. That's why there's a big crash. When I talk about big crash, I'm referring to like crash of more than 30%, 40%, 50%. Okay, so those are the events that has happened before. And I personally use this a lot to tell whether the market is a good time to enter the market. And if you look at this VIX index, you can actually get it from Google, Yahoo Finance. Okay. Every time when the index hit all-time high, it's the best time for you to invest, especially when you start to reach 60, 70, 80. Okay, that was in 2008, 2009. And 2020, the time when I was investing in 2020, I was seeing this chart live, 56, 65, 70, and it was jumping so quickly, so high. And that was the time where I actually deployed a lot of my money. Okay, so that's the time where you should start to get in. Okay, but once the VIX index started to drop at 2010, I think you could just sit on the cash and wait for the next down cycle to come. Okay, unless you have a good opportunity, you can actually invest. Okay, so this is one that I personally use it a lot. And yeah, so if you look at the, I also use this a lot, S&P 500. Basically, I measure the average earnings of the S&P companies, and then you kind of like measure it against the market value that they have. Okay, so let me show you the chart. This is a chart that I pull out from S&P itself. Okay, and you can see that this is the current market PE for S&P 500 as of now. Okay, so it's about, I think, slightly above the 10-year average at about, I think, 24 times. Okay, so this is the current average. So the market again is on the slightly on the expensive side. So it's not really a good time to start buying a lot of investment in the US. Okay, because things are slightly expensive. And if you draw the two lines here, how I tell whether it's the best time to invest is when this line here touch the green color here. That's the time where you should be deploying cash. Right? This is US market. Okay. And when it's like touching the red line here, it's time to sell. Okay, so that's how it's basically part down some of the investment that you have may overvalue. Okay, but you need to stay invested for sure. Okay, especially if you invest in those good companies. And so I can't tell you when the market is gonna crash. Okay, because you don't know when the black swan event will come. Okay, no one knows, right? So, but what I can do is actually help you to prepare. When the next crash, with the next crash come, what should you do, right? So when the next market crash comes, okay, you need to be prepared. You may lose your job. Because it happens many times, every time when there's a crash, there's a lot of retrenchment. And you can see that the COVID-19 was at all-time high at the point of time, okay? So you might lose your income. So how should you prepare? You might lose some income, right? You need to make sure that you have some emergency cash, okay? So as a buffer, 6 months of your monthly expenses or household expenses that you keep that in cash. These are what you call as emergency fund, okay? And of course, when you have the emergency fund, you don't put that in the bank, okay? Sometimes you can put it in the SSB, Singapore Savings Bonds. I think the last 6 months, the SSB has been around 3% or more, okay? So I will share with you more later, right? Okay, so you need to have that emergency fund. And of course, some of you who have invested in the market, yeah, I already have the emergency fund, okay, but the question is how much cash should I keep at all time, okay, especially if I already invested in the market. If you look at you all know this guy? Warren Buffett, right? So all of you know this guy. The 𝗪𝘆𝘀, nobody knows. Yeah, for a good reason, okay? So you listen to the right people, huh? So if you look at Warren Buffett, if you go and analyze his company, and you look at how much cash he holds over the years, you see that he keeps his cash holding about 20 to 30% at all time. Okay, so if you invested in the market, if you have $1 million portfolio, you should be maintaining at least 200,000 to 300,000 at all time to take on the new opportunity when the market crash. Okay, so that's what you can take from Warren Buffett. You see, when there's a crisis, Buffett will deploy. Okay, all-time low of cash, right? And then of course he missed out the 2020. But he still did quite well with his Apple investment, okay? Because 2020 was a year where the crash took 2 months to reach 35% and below, okay? And take 4 months to fully recover. So the whole cycle only take about 6 months. This is the fastest crash and recovery that we have seen in the stock market history, okay? So you don't expect every crash like that, okay? And yeah, so you look at the SSB, Singapore Savings Bonds, I think the yield is about 3%. So you should go and park your money in there now. But recently, SSB, I think the yield is sort of like dropped to 2.8%. Those of you who have missed out SSB, Singapore Savings Bonds, obviously you can still consider this, right? I mean, last 6 months I've been buying up SSB, but there's a limit to SSB. You know how much? 250,000. Once you max out, you have to 200,000, yeah, sorry, thank you for the correction. 200,000 there about, okay? Once you max it out, you have to park somewhere else, okay? You either can park with the FSMOne, there's, I think, money market funds, you get higher interest rate. If you don't do anything with it, you're gonna earn a very little interest rate or zero interest rate, okay? So you gotta do something with it. Yeah, and when I talk about market crash, usually I'm referring to the correction of more than 20%, right? So this is what I call as a mini crash. Big crash would be like 35, 40%, 50%. Okay, so these are what we call mini crash. And when that happens, okay, oh yeah, so back to this first. the COVID crash is one of the fastest one. Okay, you don't expect every crash to be that fast. If you look at the 1968 and 1970 crash, it took 4 years for the full cycle to see the full recovery. And then, of course, in 1973, it took 7 years for the market to fully recover, right? And 1987, it took 2.5 years for the market to recover, right? And .com, it took 7 years, right? And then 6 years. COVID-19 is the exception, like I said. Don't expect the market. Next time when the market crash, you expect 6 months you go up. No, Okay, historically, it will take a few years for the correction, okay? So that's why it's important for you to invest the money that you're no longer going to need it in the next 5 years or 10 years. Don't invest money that you need it next year or 2 years later, okay? Because the crash may take longer than expected, okay? So that's why you need to prepare for that. So I don't have a lot of time to share with you more things, but I'll just summarize what you should do in the market crash, okay? How to survive before the market crash. Okay, first thing first, invest the money that you're not going to need it in the next 5 years or 10 years, okay? Because you don't want to get caught in the situation where you need the money and the market in the bad situation and you have to cash out at the huge losses, okay? So second thing is that don't leverage if you're investing. I've seen so many people get bankrupt because of greed, okay? And leverage is the one that's always killed them, okay? Even for a bad investment like I have done myself, the worst thing that I can see is like 70% down, 50% down, but I won't get bankrupt, okay? So don't leverage. I know you can make a lot of money, but it kills a lot of people, okay, in the past. And of course, pay down your debt if possible. And of course, have an emergency fund. And make sure you are insured, okay? If you have the mortgage insurance, of course, if you lost your job, you will get paid for that mortgages, okay? And of course, you have your, I think, hospitalization, critical illness. Those are the basic insurance that you need to get, okay? And of course, the last one is ignore the noise, okay? Because there are going to be a lot of noises out there when you read the news. Especially once you put in the money in the market, you will start to read out financial news. And financial news can be very scary. And yeah, so remember this was a screenshot that I took in 2020, right here, March 2020, during the peak of the pandemic. And this article said, the worst of the global sell-off isn't here yet. You dare to invest or not? No. Okay, but that is the time to invest. When you start to see articles like that, okay? And when you start to see people losing money, people say, it's xiao, you go stock market, now everyone is losing money. That's the time to invest, okay? So this is from my experience after seeing so many people across different cycles. I mean, look young, but I've gone through a lot of cycles already, okay? And yeah, so every year there will be the macro news about certain topic that makes you scared, okay? Don't get influenced by that, okay? Make sure, just remember this, what Warren Buffett always say, be fearful when others are greedy, be greedy when others are fearful. Can? It's easier said than done. When the market crash, all of you won't be here. Okay, and I'm done. Thank you so much. Happy New Year.